Hey there, it's Will. I thought I would go through the markets again and look at certain sectors and try to find some things to trade, to invest in. So I use the charts, I use technical analysis, and I've got this program called TC2000 here. If you want to get a free trial or $25 off, check out the link in the description. I've done quite a few videos on this software as well as, what sort of my philosophy is. So let's get into it. So I start out looking at the markets. It's kind of a strange market to me. Flat for the most part. If we look at Russell 2000, it's a bit choppy. Reached almost a new high here and then kind of bounced down off of it. But like things are above the 50-day and above the 21 EMA. But it's not like this nice uptrend here. We're kind of in a flat, choppy period, and it's making it difficult for trading. I haven't done as many videos lately. It's just, it's not a great setup in general. If we look at the NASDAQ, it's had some strength recently, back up above the 50 and the 21, but it's kind of reaching, if you extend this line here, it's close to, a recent high, which can be often be resistance, but it's definitely come back. And so the idea was that if you notice that everything's kind of related, so I have to talk about other things too, but the 10-year interest yield of the U.S. bonds has been going down, which is good for tech. So basically, the fear of inflation and interest rates rising was bad for tech because interest rates are used to calculate the present value for future projected earnings. And so if the interest rates go up, then that makes the present value go down. The other thing is with tech is that it's gone up a lot, like Cathie Wood's, the ARKK funds and stuff like that, biotech and everything. So, they do often need a rest period, but it's been showing strength here. Where it was kind of shifting to a value trade and then from tech and growth. But we'll have to see if that continues. S&P is kind of a mix of, tech and other things. So it's in between sort of the Dow and the NASDAQ in that sense. It's looking good. Like in terms of an uptrend and basically above the moving averages, everything is fine. But you can see these candles, they're quite small. So when the markets are in this kind of state, there are other things that can do well, where the market's not going to go against you. It's just kind of stagnating, but there's stocks that are in a good, have a good chart. So Dow Jones, same sort of thing, had a good up run. It's kind of flat. This is declining momentum as well. So, we'll see if the value trade is kind of waning, I guess you could say. I'm going to flip over to TradingView just for a sec here. I have the 10-year yield here. And you can see that, it was going up quite a bit. People were getting scared of inflation. But then the Fed said, well, it's transitory. So that's the question. A lot of people don't believe that it's transitory. But a lot of commodities and things have come down in price. So you see this interest rates going down. So that kind of coincides like early April with the NASDAQ starting to pick up again. Also, if you want to get TradingView, not only the free version, but I've got a paid version, check out the link below. That'll help out my channel with any referrals. I've got multiple watch lists here for cryptocurrency as well. So I've got like 4 watch lists. You can have more alerts than just one if you want to put a price alert. And you can have more indicators than you get with the basic. So I held off on doing that for quite some time, but now I use it. And if you're making money in trading and you want to have the tools, you don't want to be limited all the time to, I can't have another indicator because I didn't pay. So if you want to check out a link for that as well, check out the link below the video. So basically going back to TC2000, And just briefly, the VIX is just continually to go down. Like I thought at some point, you start to see a little perk up that it's just gonna trigger something, and you get these little short things, but nothing. And the amount of low volatility, like the reducing volatility, is incredible. So there's really no fear at this point. So that might be a bad sign. I'm not super comfortable with this market right now, just choppy and flat and up and down with value or growth and interest rates. Don't know which way they want to go. So like right now, the dollar is strengthening. I've got a US dollar thing here because I'm in Canada, US Canadian dollar. And the US dollar has definitely strengthened just a little bit here. So we're not, we'll see how far it gets. But from there we go to sectors. So I've got a whole bunch of sector ETFs here, and what you can do is click on the scan button, and I've got this thing called strong relative strength. So I wanted to find trends that are strong compared to the S&P. So this is this graph here. So if we go to retail, let's say, it's, even though they're in an uptrend, you want to see if they're the strongest. You want to see what they are relative to the S&P. So we have a kind of a flat period here, but this has been one that was much stronger than the S&P 500. Financials also. So when you have this line, the moving averages and the relative strength is above the 50-day moving average in terms of the relative strength. And so you can see here that this has done really well. So financials have been doing really well because interest rates are going up, but now there's a bit of a pullback here with interest rates declining. So we'll see what happens. Energy, obviously that's been in a great uptrend. You can see that, we're above the 50-day moving average, and so energy is another strong. A lot of the metals, uranium, you can see here, this is really strong. We're in this uptrend here, and this is the relative strength line, and it's got moving averages as well. So ideally it's above the 50 and the 21, similar to stocks, but this shows how strong it is compared to the S&P 500. There's lithium. I get nervous like when it gets close to a previous high and after you've had a big run up. So you want to kind of get it down lower. And so a lot of times what happens is the stochastic is oversold. It's kind of overbought, oversold type thing. So in the oversold area down here, you want to look for an opportunity where it starts to go up. So you have this doji and then a gap up. So I like to use candlesticks as well. A doji with a gap up signaled a reversal. And if you want to wait till it gets above these moving averages, you have an increasing stochastic and an increasing momentum here. And that's a really good entry point. But up here, you're in the overbought area and close to resistance. So it's probably not a great time to buy. Other things like commodities have done really well. You can see the relative strength here in a nice uptrend. There was a huge 5.5% gain on Friday, it seems like. So metals and mining and stuff like that. When you're in these ETFs, a nice feature of TC2000 is you can click on a component watch list and you can see individual stocks that you might want to get, which are, U.S. Steel, and various other things, depending on which, ETF you're looking at. If I turn off this, I notice that because the tech is sort of coming back, it's a potential to get into various things. Like, I really like this type of look here. You had a huge run, you have a huge pullback, and now you've gotten above the 50-21 EMA, and the 50 is above the 200. So you just, ideally this 21 would get up above the 50, but you're basically at the point when the stock is rebounded and broken above the 50-day. You are in the overbought area, but that can sustain itself through uptrends quite a bit. But that's one to watch for sure. TAN is close to that point. The ARK funds as well. We've just gotten right to that point where all the moving averages are converging. So we had a huge pullback, and I think that it's you know, obviously people bought the dips and things like that, but from a stock chart trading perspective, if you draw a line like a trend line, you've kind of broken this downtrend, and now you're starting an uptrend. So it's, if not now, it's pretty close once it's above these moving averages to as an entry point. And that goes for other ARK. If I sort these by ARK, I've got ARKG in here, very similar. So the ARK funds are all kind of similar, but in terms of the charts and what a lot of times they have similar stocks, but there are quite a few, there's differences in each of these. But I think that this one is looking to make another run again. And of course, there's a lot of uncertainty with interest rates, you know, if inflation picks up and that type of thing. But so those growth stocks. And of course, inside of ARK, you have various companies you can take a look at. CRISPR, you know, has had a huge downtrend, and it's now broken up above. It's you know, ideally the 50 and the 21 would get up above the 200. DocuSign, it's a bit choppy. A lot of like Zoom and everything, you see how much it came back. Has everyone figured, well, everyone's going back to work, and it still has some work to do, but it's a positive sign. We had one here, and the 21 even got up above the 50, and the 50 was above the 200, but it was kind of, the 50 was still kind of down sloping. But if you draw a line across, you know, depending on where you draw it, like here you would have had that break, but you know, that's why it doesn't always work. You have stop losses, and then, you know, you do another one. You've kind of broken that now, but you've got that 200-day moving average. So you could wait for more confirmation on that. If I go, skills was standing out. So that had a huge pullback, and now we're up above the 50. So I think there's a potential for a big run here with the tech, because they've had a huge downtrend. Tesla getting close to breaking up above the 50. So hopefully that gives you some ideas. The tech is looking like a potential area, tech and renewables and all that stuff, which had a huge run. You know, you've got your strong financial metals and mining, but I'm not sure how much more that has to go with, you know, with the inflation sort of thing. So that's why there's some uncertainty in that area. But, you know, a nice thing with the tech is that it had a big drop, and so it's a better entry point in terms of getting in, you know, instead of something that might have had a huge run and hasn't really had a big pullback like financials and commodities and stuff. One other thing I'll just talk about a little bit is precious metals. We had this break and a nice really uptrend run here. We'll see if it, you know, once it pulls back a bit, if it's going to keep going. PSLV is a Sprott silver. It has a lot of silver backing it in the vaults and stuff. But yeah, so like I was saying, that there's a resistance here at about 10. So once you break up over this 10 and head up, I think silver has a way to go, has some room. And then of course you've got the miners. If you decide, similar situation, if you draw, you know, because it's been so choppy and never gotten out of that range, one thing you might want to do is put a line in this range here. So that's in about 50, 51 of the global Sprott miners. GDX is the gold miner, looking pretty good as well. Broke through after a big pullback, and we're above the 50 and the 200s and stuff like that. So I think a lot of people do believe there's inflation with all the printing. I mean, there is technically inflation, but you know, whether it's transitory or not. So that's where the risk comes in. If things go back to normal, you know, gold will probably sell off again. But you know, all the borrowing and printing is definitely troublesome. So we shall see. And then wage, there's also salary, wage, trying to find workers who are getting checks to stay home. And so finding workers will raise inflation raise the wages, and that will drive companies to raise prices as well to make up for the increased wages. So that is the conundrum we have where there's dual belief systems, and we, as much as we can, use the charts to kind of stick to the trends in the charts, because they do tend to follow trends. Even if there are ups and downs, you know, they're for periods of time, they will follow up or down trends. So hope that helps. And don't forget, you can get TC2000 free trial or $25 off in the link below. I'll be doing other videos on cryptocurrencies, and I use TradingView mostly for that. And I'll show you some of the sites where I'm getting some good interest rates and yields on those, if you don't want to have them just in your own wallet. So we shall talk to you next video. See ya.